This is Barry Zalma speaking for Claim School Incorporated with another true crime story of insurance fraud. This one, video number 55, is entitled, I'm Going into the Insurance Business. It is a true story. The names have been changed and the places to protect the guilty. Most insurance companies are formed by major corporations with considerable assets. They are capitalized with serious money needed by the insurer to cover losses until profits are made. The company is staffed with insurance professionals who believe in the concept of spreading the risk. The insurers, whether new or old, provide a definite service to the public. Betty Bruja wanted to start her own insurance company. She had been an insurance broker for 10 years. In those 10 years, she had trained herself with books and training courses from the Insurance Risk Management Institute, the Society of Certified Property and Casualty Underwriters, the Insurance Institute, the Insurance Claims Library, and any other publication where she could learn about insurance. By devoted and lengthy study, Betty obtained the designation CPCU, or Certified Property Casualty Underwriter, in the minimum time allowed by the Society of CPCU. She studied underwriting and claims handling. No person, Betty thought, was as knowledgeable about insurance as she. No insurance company operated efficiently. Massive profits could be made if she only was put in control. For 10 years, Betty Bruja toiled in the trenches of the insurance industry, obtaining a small income of 5% to 15% commissions. She was frustrated. She knew she could make money if only there was capital to fund a new insurance company. Desire, overconfidence, and pride eventually overcame the moral sense beaten into her by the Jesuits at Loyola University. As a licensed insurance broker, she had the trust of her customers. They would never check to find out if the insurance she provided them was really written by an insurer admitted to do business in the state, or were only a figment of her imagination. She obtained from the Department of Insurance a list of all insurers authorized to do business in her state. She then reviewed the annual report of the insurance commissioner and found 3 insurers who had only written $15,000 in premium in her state. These insurers simply had no marketing effort in her state, nor did they have any employees in the state. From the 3, she selected one that had the most secure-sounding name, Security and Permanent Insurance Company of America, SPIA. Betty then began advertising special insurance with modest prices to her clients. She reported the availability of a special program for commercial general liability insurance that specialized in high-risk businesses like carnivals, bungee jumping facilities, county fairs, and hang glider parks. The policy would be issued by SPIA, an admitted A-rated insurance company. Betty quoted a premium 30 to 50% less than that quoted by insurers operating through the surplus line market. Customers rushed to her business. Betty created on her word processor official-looking application forms seeking detailed underwriting information. She agreed to take premiums on a monthly basis with no interest charged. Each applicant received a laser-printed declarations page. She created a professional-looking SPIA logo to add formality to her fraud. No insured received the wording of the policy. The declarations page referred to standard insurance service office forms of CGL insurance. The persons who thought they were insured with SPIA were not insurance professionals. They only looked at the declarations page to find out that the limits met their requirements. They were thrilled to reduce the insurance premium that they paid. Premium dollars flowed into Betty Bruja Insurance Brokerage. She deposited all of the premium in her trust account, paid herself a 12.5% commission, and then paid the remainder into a special SPIA account. She intended to use that money to pay the few claims she knew would come despite the quality of her underwriting. Ms. Bruja hired an independent adjusting company to investigate and adjust claims. Since none of the policies had any wording, she denied coverage on most claims by creating a policy exclusion to fit the claim. During the first year of her program of fraud, she paid no claims and collected $500,000 in premium. In her second year, she leased a new office and purchased the most high-tech computer system to operate her new business. At renewal time, she advised all of her insureds that SPIA had gone out of the market. She had a new contract, however, with Professional Property and Casualty Insurance Company of Newark, New Jersey, PPC, that would write the same types of insurance for a premium only 5% greater than the SPIA policies. Her second year of business was better than the first. Word of mouth worked to find her new clients. The premium collected doubled. Betty Bruja had proved to herself that she could control an insurance company. The fact that the paper she was using was fraudulent did not concern her. The fact that one serious injury claim would exceed all of her assets, including all of the premium collected, did not concern her. Betty was certain that her underwriting skills would keep away from her door any serious loss. It was the top-heavy, incompetent insurance companies who accepted as insured those persons who had serious losses. Robin Sleuth was the owner of a small traveling carnival. He had purchased a policy from Betty and renewed it with PPC. He was pleased with the premium. He needed a certificate of insurance in the name of the city of Ojai because his carnival was setting up on an empty lot owned by the city. Betty was slow in issuing the form. Robin looked at his insurance file and noticed he had never received policy wording from Betty. He faxed her a letter demanding a complete copy of his policy and a certificate. Betty, recognizing a troublemaker, sent Robin a notice advising, since they could not agree, that his policy was canceled flat, and she returned the premium he had paid. Robin was furious. He was forced to cancel his appearance in Ojai and scrambled to get insurance through another agent. The premium was twice what he had paid to Betty. Robin was the black sheep of his family. Robin loved carnival life. His father was a respected trial lawyer who specialized in suing insurance companies. His mother was a supervisor in the fraud division of her state's Department of Insurance. At a family dinner, he explained to his parents the problems he was having with insurance. His parents, insurance professionals that they were, suggested he deal directly with the president of the insurance company. Mrs. Sleuth obtained a direct phone number for the president of PPC from her office, and Robin called the next day. The phone was answered, and the first thing Robin said was, "Why did you cancel my policy without warning?" "What policy?" the president asked. "The $1 million commercial general liability policy you wrote for the Sleuth Carnival." "Really? We don't have any insurance in force in your state," the president responded with concern. "From whom did you buy this insurance?" From Betty Bruja Insurance Brokers. Isn't she one of your agents?" Since the president had never heard of Betty, he obtained as much information as he could from Robin Sleuth and asked that he fax all evidence of insurance available. When he received the declarations page, the president knew the documents were fraudulent. The policy numbers were not numbers used by PPC, nor did PPC ever use ISO forms listed on the declarations page. PPC immediately hired a private investigator and counsel experienced in fraud investigations to deal with Betty. They flew to Robin Sleuth's home city and interviewed him. They obtained copies of all written evidence and obtained Robin's promise to maintain the originals in a secure place that were not to be destroyed. The lawyer and the investigator then flew directly to the city where Betty did business and arrived at her new paneled offices. They demanded to see Betty. Betty, resplendent in her tailored wool suit and silk blouse, met them with courtesy. They told her whom they represented and that she was issuing policies in the name of PPC without authority. Betty was shocked. She denied she issued policies without approval. She would do everything she could to help them. Ms. Bruja wanted, however, before discussing it with them further, to speak with her lawyer. She made an appointment while they were there to meet with her lawyer the next morning, and then they would all meet that afternoon. She promised to issue no further policies until they met the next afternoon. Betty's lawyer was an honest person. He would never go along with her fraud. She needed something to show him. On her computer, she created a letterhead for Nicholas Claus Insurance Services in Houston, Texas. The letter which she created was dated 6 months before. Claus, as managing general agent for PPC, authorized Betty as exclusive agent in her state to write CGL policies for carnivals, bungee cord facilities, and hang glider parks. The next day, she and her lawyer expressed a willingness to help cure the problem. Betty was just a dupe, they claimed. Letters were immediately sent to every person who believed they were insured, advising them that no insurance existed. Betty and her lawyer agreed that she would never again write a policy in the name of PPC. She apologized and agreed to a restraining order, which was issued by the local U.S. District Court judge. PPC and its lawyer were satisfied. They had stopped a fraud in progress. They reported Betty to the insurance department and advised the department of the agreement. The department, overburdened with other work, did nothing since PPC had solved its problem. What was unknown to PPC, its lawyer, or Betty's lawyer was that the next day she picked a new insurance company name. Betty rolled all of her clients into Surety and Providence Insurance Company, SAPIC. She told each that she had been duped by PPC, but had protected them by getting insurance for them with SAPIC. Betty was living well. Fraud seemed to pay for her. Soon she will make enough money to actually capitalize a legitimate insurance company. Unfortunately for Betty, a 3-year-old child fell out of a whirligig and became paralyzed. The parents of the child sued the carnival, who presented a claim to Betty. She immediately and retroactively canceled the policy and refused the claim. The carnival had no option but to file bankruptcy, and the child became a ward of the state. Betty, seeing the writing on the wall, emptied her bank account and moved to a retirement community in Sao Paulo, Brazil, and never tried to be in the business of insurance again. Fraud succeeded. The child was damaged without any chance of being compensated. And Betty is living well and enjoying life in Brazil. This video is adapted from my book, Insurance Fraud Costs Everyone, which supplements my 2-volume treatise on insurance fraud called Insurance Fraud Second Edition, all of which books are available as Kindle books and paperbacks from Amazon.com. If you view this video on Rumble, please click the Rumble button, and if you view it on YouTube, please click the like button. Thank you for your attention.